Morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Hump Day. It's February 3rd. We got a couple items here on the docket, and we'll start off with the ADP employment. This is kind of our prelude to Friday's jobs reports that will be provided by the Bureau of Labor Statistics. So these are basically just taking account of the private jobs out there, whereas the Bureau of Labor Statistics does private plus government jobs. So back in December, we had 267,000 people, new jobs that were created, and January was only 205, so pretty slow right there. Not as good numbers right there. Also, ISM non-manufacturing, also known as ISM services industry, had a slowdown a little bit, also in the month of January. So we had a 55.8, which anything above 50 is still considered expansion. It was supposed to stay slightly in that range at 55.2 as expectations, but it dipped further down to 53.5. So obviously the service industry also came down. So this is kind of creating a little bit of concern with the investors out there, especially after having a rate hike in December and thinking that the economy is moving along, where now we're starting to see a few things pull back a little bit. So we'll have to so this is where the thoughts are. And comments by Fed Studley, he's based out of New York, basically kind of indicated that the Fed will be looking at these type of numbers coming in March before they decide if there's going to be any rate hikes or not. So basically just trying to give assurances to the market that the Fed is aware of these numbers, that does seem to be some of the data that's coming out now after the rate hike that are showing some slowdown or potential to slow down the economy before they had done the rate hike. So this is something that they're going to pay attention to coming their March meeting here. Stock market was way down earlier today, but since then has pulled back a little bit. Partly that is due to oil prices went up a little bit. So yesterday they closed below $30 a barrel, and today they're at about 30, 31 bucks a barrel on trading. So that's kind of helped the stock market a little bit. It's still in negative territory, but the Dow, to give you an instance, it was down as much as 100 so far this morning. It's pulled back to around 20, negative 20. Bond market, as you can see, same thing. They're kind of competing for dollars. So we were up much higher, the bond prices, and now we're only up about 6 basis points. So depending on the timing of when the lenders pull out the pricings, it will be kind of a little mix, is what I would say, today compared to what we had yesterday. So pricing should be slightly better, but because depending on the timing, if it was East Coast, for example, they sent out their pricing, which comes out much sooner, pricing would have been much better. But as we get further in the day, and we get to the West Coast when they're starting their days, pricing's about the same where we left off yesterday, as 6 points isn't really enough to really change the pricing on the secondary markets. So right now, I would say pricing's almost about the same where we left off yesterday. Of course, that could change with the volatility we've been kind of seeing so far this morning. The market could be ramping up a little bit and then kind of cool off again by end of the day. It's hard to say. We're getting a lot of volatility, and again, the big numbers we're going to be looking for will be Friday when we get the jobs numbers. All right, folks, you guys have a great day. Keep in mind the rates are about the same where we left off yesterday. Still in good hands here, and we'll see you guys tomorrow. Thanks again for watching. Bye-bye.